Hi there and welcome back to our channel. My name is Priya and I'm a partner at Architecture and Company. So a little bit off topic, but it is Valentine's Day today, so I thought I would do a little video about capital gains tax on the gift of assets, particularly thinking about engagement rings. So if anyone out there is thinking of or has already and you hadn't considered the capital gains tax consequences, then this video is definitely for you. So in most cases, if you're simply buying a ring and you're going to give it to somebody who is obviously not your spouse, the reason I say that is there are specific rules for gifts between spouses. I was going to say spice. For gifts in between spouses, where a gift of an asset is deemed to be at no gain, no loss, which means if you're already married or in a civil partnership, then there's no capital gains tax issues when you're giving gifts in that way. Obviously, if you're giving an engagement ring, it means you're not married already, which means that there could potentially be capital gains tax. If you're simply buying a ring and then you're going to gift it, then there shouldn't really be any capital gains tax because if you think about it, you've bought it, let's say you bought it last week, and then let's say you're giving it today. So when you give an asset like that, when there's not an actual price that you're receiving for it, it's deemed to be transferred at market value. So that means that whatever the market value of the ring is, it's almost like we pretend that's what you sold it for tax purposes. But obviously, if you only bought the ring last week, then chances are the market value now of the ring is going to be, broadly speaking, the same as what it was last week. So there shouldn't be any capital gains tax. An issue can arise where you're giving a ring that perhaps is a family heirloom, or it's maybe a ring that you've purchased some time ago and maybe it's some rare kind of diamond that goes up in value, or it's antique or something like this. And then in that case, there could be a capital gain. So in that case, and you might think, well, why do I have to pay capital gains tax if I haven't actually received any money? But that's because you like I said to you, almost have to pretend that you've sold the asset because it's a gift that's not at arm's length. It's not I don't know how else to explain that, but hopefully if it's not making sense, put a comment in the comments below, or put any questions that you have and I will try to answer them all. So if the market value of the ring that you're giving is less than £6,000, then you don't need to worry. It's going to be exempt. It's called a chattel. If it is between £6,000 and £15,000, I'm talking about the market value of the ring, then it's a wasting chattel, and there could be capital gains tax, but it's capped. So it's a bit of a weird way of working it out. But you look at whatever the market value is. You work out how much over £6,000 that is, and then you multiply that by 5/3. Don't ask me why, it's 5/3. You just have to take my word for it. And then whatever that figure is, that's going to be the maximum capital gain. You then work out the actual capital gain by working out the market value less the cost to you. And whatever that is, you then compare the two figures, and whichever is the lowest figure, that's the figure that you would pay capital gains tax on. If it's more than £15,000, the market value then you're stuck. You have to pay capital gains tax on the market value, being the disposal proceeds, less the cost. So I hope that's been useful, if not a little bit off topic, and I look forward to seeing you again on another video soon. Thank you. Bye.